Country A's share prices have been going up and up for many years, a record-breaking performance. Initially, only larger and more experienced investors hopped on board by increasing their exposure to shares. As time passed and it was clear that there's money to be made, this changed and 1. Large investors increased their exposure, with them borrowing money more and more aggressively so as to speculate. 2. Seeing how high the returns have been, a decent number of smaller quote-unquote average Joe investors wanted a piece of the pie. 3. Prices kept going up, the average Joe investors started trading with leverage themselves, and even their friends got involved, seeing how profitable this endeavor can be. As can be seen, the longer the bull market lasted, the more reckless investors became because greed took over. Eventually, however, a so-called Minsky moment tends to appear, with market sentiment turning pessimistic for reasons which range from large-scale bankruptcies to, as we've seen, pandemics. Named after Hyman Minsky by PIMCO's Paul McCulley, this Minsky moment results in a severe asset price crash. Why? Simply because a lot of borrowed money was used to trade, and this leads to a vicious circle of investors being forced to sell assets quickly so as to generate liquidity, which leads to asset prices going down, which leads to even more investors being forced to sell, and so on. More recent examples include the Great Recession as well as the 2020 situation, with opinions being mixed. Think of it as a spectrum with two extremes. 1. Economists who believe these crashes are bitter but necessary medicine, and 2. Economists who believe the authorities need to step in and quote-unquote save the asset class in question. Finally, opinions also differ when it comes to the ideal legal framework, with the two extremes being 1. Economists such as Minsky himself who are against deregulation or let's say lax regulation because they believe it encourages reckless speculation. And 2. Economists who believe regulation is an unnecessary burden that discourages innovation.